This is a ripple from a titan of Wall Street that is going to, and we've already seen it in the stocks of E-Trade, Schwab, TD Ameritrade, and so forth. What does it mean for them, apart from what it may mean for Chase?
Well, let me pull the lens back. What we're seeing now is national digital banking wars like you've never seen before. So customer receptivity is higher than it's been. Company capability is more advanced. And importantly, after 25 years after national banking was first allowed, the largest banks are focused on building a comprehensive relationship with a full suite of products. So in the national digital banking wars, we think the winners are the Goliaths of the industry, like JP Morgan. So
you have a prop like you always do.
You brought some.
So you
hold them up.
You have a lot of Davids out there, but we think that the Goliath is going to win in the national digital banking.
And who are
wars.
the Goliaths?
The Goliaths are JP Morgan,
right.
Bank America, and Citigroup. Those are three money center banks that we recommend. We think this is a 25-year structural breakout for the benefits of scale. Michelle, don't touch my dolls.
Don't tease me, Mike. Who are the Davids?
The Davids are some of the smaller players, especially the smaller banks. So when you talk about smaller banks developing these sorts of capabilities, you know, they have their back against the wall. When you look at monoline companies generally, though, the pendulum has swung from the monoline companies
What's
back.
a monoline company?
Well, it's someone who just sells credit cards, someone who just sells
Is
one
TD
product.
Ameritrade a monoline company? It's getting hammered by 7%.
Well, look, I mean, some of the large banks have been, and others have offered free trades in the past. This is not the first time this has ever happened. So there's other competitors out there. It's happened before. What's different this time, though, is when you look at JP Morgan, the amount of the technology spending, $11 billion a year, the amount of the marketing dollars, $3 billion a year, both higher than it's ever before. The receptivity of the client certainly has changed. So JP Morgan and the other Goliaths are pressing their advantages to really create a comprehensive relationship as opposed to simply one product.
Is this a race to zero? I mean, we had Fidelity on a couple of weeks ago. They're offering no-fee funds. You have this move by JP Morgan. You have the startup Robinhood. Are we going to continue to see the fees get cut? And if so, then how are folks making money on this?
Well, I'm going to comment more broadly. I mean, not just this one product area. It could be a race below zero. I mean, you're seeing some banking firms where either they're taking an upfront hit simply to get a customer relationship. So I think the wave of the future is what's the total value from a relationship as opposed to simply one product.
Why is this a targeted move at millennials and at a market that kind of isn't there anymore? People trading individual stocks?
Absolutely, this is a move for millennials. The millennial market, they're about 15 years younger than Chase's, private client group right now, and you're using a lot more online applications. You have investing. So if you think of the emerging affluent millennial class, this is a strong play for them. And look, this is a marketing battle for millennials and everybody else. And I don't think it's a coincidence that today is the first day of the qualifying matches for the U.S. Open. JP Morgan sponsors the U.S. Open tennis tournament. And next week, JP Morgan's rolling out its full new investing app.
A lot of advertising opportunities.
This is a marketing battle.
I can't help but think this has much bigger implications in terms of income equality. And what I mean by that is you have a huge swath of the U.S. population that hasn't participated in the market rally because they weren't invested, millennials being a key piece of that. And all of a sudden you make it easier to invest. What does that do to the middle class? Yeah, exactly.
Well, it's certainly a necessary but not sufficient condition to get those who have not been investing to invest some. I mean, simply opening up an account and getting free trades, you can at least dip your toe in the water more easily.